Thanks everyone for coming by. It's been a fantastic crowd actually. Very big crowd for the meetup. It's been a long time since I did a meetup. Very good to be out of home. COVID's over. There's no COVID in UK. Everybody's wearing masks in Asia. It's really quite confusing to come here in the UK and everyone's like, yeah, no COVID here. So yeah, my name is Bobby. I'm the co-founder and CEO at CoinGecko. I started CoinGecko in 2014. Got into the crypto space in 2013. As Samantha said, what we do is we track crypto data. At the moment, we track over 13,000 tokens on CoinGecko. Basically, the price, market cap, trading volume, some of the stats like total value logged we got from other places, and basically one of the largest aggregator around. So a lot of shitcoins, I suppose. The other thing that we are kind of working on these days as well is we started tracking on-chain data as well. So we started building geckoterminal.com. And basically with that, Gecko Terminal automatically aggregates and tracks all these tokens. So there's over 600 tokens that we track on geckoterminal.com. So we've been, today I'm just here to present on the Q1 state of crypto market. We publish a quarterly report from every quarter since 2015, I believe. And we just released our Q1 report. So I've got like about 20 minutes to present, and then we have like 5-10 minutes of Q&A at the end. And so I got just a few snippets of slides presented today. So yeah. Oh, the chart looks messed up. But it's all right. So yeah, this is the 2022 spot market. Market, as we all know, was pretty screwed up in Q1. Like price just went down. On average, like from January to March, price was kind of in a crap mode, I suppose. It went down and it went back up again, negative 1.6%. I think in Q1, FTM, Phantom, OKB, and Uni token fell off top 30. FTT token from FTX, ETC, and Waves broke in. And spot trading in general have visibly shrunk since May 2021, but remained relatively steady throughout Q1. I think in terms of the market cap, I think there's a lot of correlation between crypto, the S&P 500, and Bitcoin. I mean, so historically, in the early days, crypto is not correlated with the traditional markets, but these days, more and more so, it's very correlated. So we drew a correlation chart. Basically, the top 30 coins and by market cap and S&P 500 had correlation of 0.72. As well, Bitcoin has a very high correlation as well. So, and all the other coins, top 30 coins, basically are very correlated with Bitcoin with a higher beta, for example. So I think these days the crypto market pretty much moves quite closely. Depends very closely on what the Fed decides to do. If they choose to ease or tighten interest rates, for example, increase or decrease interest rates, or their monetary policy. So I think a lot depends on the FOMC meetings, and so we'll be keeping a closer eyes. I think it's going to be challenging 6 months, for example. Arthur Hayes of BitMEX had kind of said that, yeah, we're probably going to see test the 30Ks for Bitcoin, but let's see what happens, right? This is a chart of trading volume on centralized and decentralized exchanges. So what we found was that trading volume has pretty much gone down since late Q4 2021. So you see the price went down from November to February. I mean, the volumes went down from November to February. And then in March, it started picking back up again as the price goes up. We took the top 10 exchanges for DEX and top 10 exchanges for centralized exchanges. When we plot the volume out, what we saw is that decentralized exchanges have roughly about 10%, 11% market share among the top 10 exchanges. So DEXs surprised me in the sense that if you asked me like 2 years ago if anyone's going to trade on DEX, I said there's no way that this is going to happen because it's too hard for anyone to even start using MetaMask, but kind of surprises, and it's kind of got a good share around 11% or so these days. In terms of a breakdown of the volumes for centralized exchanges. So we started breaking down their volume, and we can see that Binance is still by far the biggest centralized exchange. So it's got about 45% market share. OKX, second at the moment. Maybe the volumes may be a bit questionable, but we don't know. It's a fact. Most of the Chinese exchanges, we know what they do. So Coinbase is the third largest exchange, about 10%, followed by Crypto.com, KuCoin, FTX, and then a bunch of other exchanges as well. But generally, volumes fell about 40% in Q1 as well because volumes and interest basically correlates quite closely with Bitcoin price and crypto price, and it goes down, volumes go down as well. In terms of DEX, okay, this is also messed up a little bit. So Uniswap is surprisingly, one of the DEXs that kind of changed the decentralized exchange game. Before Uniswap, it was, I guess, very hard and almost unimaginable for the normal retail guys to be using DEXs. But Uniswap changed the game, and Uniswap sort of, they still have the market share. So at one point, so the pink ones represent Uniswap. So darker pink is the older version of Uniswap, which is V2, and the lighter pink at the bottom is the newer version of Uniswap, which is V3. So roughly 55% of the market is by Uniswap, and they have the entire share. We would have thought that by now, a lot of other DEXs, there's so many DEXs, at least 200-300 DEXs in the market, like they would have taken share from Uniswap, but data doesn't show that that's the case. PancakeSwap has kind of shrunk as well from late 2021 and it's up about 8%. I think Serum's kind of picking up market share right now on Solana, so that's something interesting. But the rest is sort of a lot of their DEXs relies on the growth of the other chains. I think it's an interesting chart to share on Q1 2022 and Q4 2021 performance. I think a lot of them were struggling in Q1. Solana was the biggest, went down 30% in Q1. DeFi was also challenged, a lot of DeFi tokens. Uniswap went out of top 30 as well. Rune, surprisingly, was a star performer in Q1. There was a lot of changes that took place, a lot of constraints lifted on Rune, and it was a star performer. Top 5 exchange token, FTT and Leo performed. I think Leo is interesting because 96,000 Bitcoins that were, Leo token, for those who are not aware, is the exchange token for Bitfinex. And we used to joke that it's kind of a stablecoin because it doesn't really move compared to the other exchange tokens. But Leo token is kind of like, you can think of Leo token as like an option, a call option on Bitfinex recovering all the Bitcoins that were stolen or hacked from them. Because the reason why Bitfinex launched this Leo token back then was because they lost a lot of Bitcoin and they needed a way to recapitalize the exchange, so they launched this token. So I think in Q1, the FBI recovered 96,000 Bitcoin, and that was the reason why they increased the price of the Leo token, because suddenly it's now backed by all these Bitcoins gained. Play to earn is kind of like interesting. Axie Infinity saw a massive hack, $600 million were lost in the breach. It was kind of, we start seeing all these play to earn games, like we start seeing a ramp up in users and the price goes up, everything goes up, very nice. But then at some point, growth slows down and then the price will struggle as well. So Axie's Infinity is struggling. But then you notice down there, GMT has 1402%. So for those of you who don't know what that is, it basically means Step N, which is an app that is not play to earn, so you're not paid to play a game, but it's a move to earn app. So you basically get paid to walk or run on the street. And just to give you some context on how profitable things are these days, so a shoe will cost you about 10, 11 Solana, so maybe about $1,000. But you can, and you have to upgrade your shoe from level 1 to level 30. And if your shoe's pretty upgraded well, like you can earn roughly $70 to $100 for 10, 20 minutes walk on the street. So that's pretty profitable. I'm doing that on the street in London. It's like, why not, right? $100 for a walk. So yeah, that's kind of like Step N, like it's a play to earn, move to earn game. I think there are a few other move to earn games that are launching this quarter. Genopets and Virtual with a W, I think is coming up. So if you missed that one, so I think all the move to earn apps are probably the ones that will probably take off in the next quarter as well. So DeFi. So in terms of DeFi, like it's been pretty crap, CRAB crap, like not much movement, like in terms of market share. I think the 2020 was kind of like the star season for DeFi, like it went from nowhere to taking out a big share of the crypto market. market cap sort of like decreased 5.4% in terms of the entire market share. And I think one thing, this is a chart of the multi-chain world in crypto. So crypto used to be dominated by Bitcoin only, and then Ethereum came about, and Ethereum takes up a lot of market share. You start looking at all the total value locked, which is a metric that is used to measure the amount of assets held in DeFi applications on all these platforms, on all the different chains. Ethereum used to have 98% of the market share, but now it's decreased from 98 to 62 in October, and you can see in March 2022, it went down further to roughly 54%. For those of you who are wondering what am I talking about with multi-chains, I like to give this analogy. Every chain is kind of like an island or a country. So Ethereum is a country, BSC is a country, Solana is a country, and every single wallet transacting on the chain is a resident of the country. And every time you transact on the country, you pay a transaction fee. You can think of it as you paying tax to the government of the country. And everyone in this ecosystem, they're sort of incentivizing and trying to get more people. And every application on that app, like a decentralized application, is a company built in that country. So every government, if you may, every chain is very incentivized to bring companies to build in the ecosystem, to bring in users and residents to build in this place. So what we have seen is a collective chip in the dominance of Ethereum from a country that is a one country world order, one chain order, Ethereum, to a multi-chain world. And I don't think we've reached a stage where it's very hard to undo this, and it will be a multi-chain, and that's where we are. What this means is that when there's so many chains being built out there, you need airports, you need bridges to move between these different countries. People don't want to stay in one country, just like nobody wants to stay. I don't want to stay in Malaysia all year round. I want to move to the UK and then travel around, right? So everybody wants to have airports to bridge around. So same thing, everybody wants to move their funds from Ethereum to Solana, to Terra, to BSC, and so on. So you have all these bridges that are built to kind of move funds around, but this is the mess that has come out from all these bridges. It becomes very complex, very complicated. There is no one bridge that can take you from point A to point B. You may have to transit somewhere, for example, to get from one chain to the other chain. And also bridges are basically a new form of place for hackers to go and hack all the funds out there, because if you've seen from Axie Infinity, $600 million of funds were stolen pretty much instantly. So it's a very targeted place for hackers to take the funds. Some people are using centralized exchanges as a form of bridge to move between the different chains, but it's still not as developed as what it should be. But I'm expecting a lot of development in the multi-chain sector in the coming few months. So yeah, I think this is a chart of the TVL locked in the different Ethereum bridges. I think a point to note is the one in purple represents Ronin. So we can see it kind of have a lot of TVL and then suddenly just disappeared because of the hack, obviously. So the money just gone. But a lot of the bridges, Polygon, Avalanche, Arbitrum are some of the bigger bridges, for example. $21 billion locked in this bridge. So basically, it either is secured or constantly under attack by hackers, this amount of money. Just going to wrap up a little bit on NFTs. And I think if you look at NFTs, top 7 chains for NFT trading volume. If you look at it, total trading volume has sort of, NFT market has sort of died down in Q1 from January to March. It's kind of gone down the chart. But I think interestingly, Ethereum is still the major NFT market, and Solana, I think Solana, so purple color, Solana is growing up actually in terms of the NFT space. OpenSea is still the undisputed leader in NFTs marketplace. Looks Rare tried to do a vampire attack on OpenSea by doing incentivized trading through the token. But when it comes to incentives, like it's always very hard because people are doing things just for the sake of getting the incentive, the tokens, the free tokens that are being given out. So it did pretty well in January. February's volume went down, but like in March, its volume really depleted in March. So that's the challenge. Magic Eden is growing in Solana. So it's kind of overtook the marketplace compared to Solanat in Solana. So that's an interesting point as well. And I think an interesting NFT trend is, I think Bored Ape Yacht Club, BAYC, have sort of paved the route, paved the way forward to how an NFT project can be launched. I think we've seen that you launch with a BAYC NFT, and then you start coming out with a second NFT that is given to the original Genesis holder. You have MAYC, and then you have Kernel as well. And then they started doing the token, the ApeCoin token. And also, like, we have Lansale, so they're a massive company. I think that the acquisition of CryptoPunks and Meebits has been surprising, but also positioning them very well for the future. I think I also mentioned here a little bit briefly, it's very long here, there's a lot of words, but Nike acquiring the RTFK is it's a pretty big move. Like, we start seeing large corporate brands looking at NFTs initially as marketing expense, but while owning an asset, but also a way to engage with people who are interested in NFTs. NFTs, I think there's two parts. NFTs, I think, are one part of an equation that is helping to bring crypto to the mainstream. It's an area of crypto that a lot of people can connect with. For example, the core crypto audience are basically male, techie, libertarian, for example, but NFT have managed to bridge this. A lot of females are involved in NFTs these days. The creative people who are not involved in crypto, not hardcore tech people, are kind of involved in crypto as well. So that's a very positive development. Closing up, the other main thing that I think is going to be a big factor in bridging crypto to the mainstream audience would be GameFi. So we start seeing Axie Infinity, we start seeing people trying to play these games to earn a living, especially in Philippines, for example. And I always tell the story, I always find it interesting that for many people in the Philippines, like, we take having a bank account for granted, that everybody has a bank account, have a debit card, but that's not the case. Like, there's a large percentage of people in the developing world where they do not have a bank account. And for some people in the Axie Infinity community, owning a crypto wallet is their first bank account, and they are receiving financial services for the first time via crypto games, via crypto wallets, instead of the traditional banking system, which has failed all these people in the Philippines, for example. So yeah, that's it, ladies and gentlemen. That's my last slide. Thank you very much.
Thank you, Bobby. I have a question about move to earn tokens. What do you think about them? It looks like a scam a little bit. I think from the outside. What is your opinion?
Yeah, I think I view move to earn as just a subset of play to earn. So instead of playing a computer game or a video game and you get paid a token, a lot of them are just copying the AXS SLP token model from Axie Infinity and just putting it to some of the different things. And just that.
Do you think it's a substantial business model? Is it gonna last, or?
I mean, obviously, maybe one or two will have runway success, but as with everything in crypto, the remaining 9 or 10 will probably fail. I'm pretty sure about that. Most of them will fail. But also, a lot of these move to earn, play to earn games are premeditated on the biggest assumption that the token price will hold up as long as there are new players coming in. The moment there are no new players coming in, we start seeing things struggle, kind of like what Axie Infinity is doing. And there's only so much money that you can throw into the ecosystem to incentivize a certain behavior. At some point, you got to want people who come into the ecosystem, who are willing to pay money to have fun instead of treating it as a job to get paid. Because if everybody kind of treats this as a job to get paid, it's just not a sustainable ecosystem.
Thank you.
We're at the back here.
Hi, I'm wondering if you think the Axie Infinity bubble has burst. You spoke about Indonesia. It did so well in the developing world last year, and now when you look at daily active users, it's dropped significantly. I'd love to hear your thoughts more on that.
Yeah. So a lot of the people who are playing Axie Infinity are people who are treating it as a job. It doesn't mean, getting paid $1, $2, or maybe $10 a day $10 a day wouldn't mean much here, for example, but it means a lot, like in the Philippines, for example. So a lot of them are treating it as a job, and a big assumption is how well the SLP price will do. But it's definitely came crashing down. So a lot of people, basically the assumption is a lot of people they either have no jobs or they have doing really gig jobs, for example, like a Grab driver, for example, and they're competing against it. So I think, so Axie is changing its model. Instead of just giving out tokens to anybody who plays the game, they are kind of changing it to a more competitive model. So it's kind of going down the esports route. So only those who are really good at the game will get paid at the top. But the mass majority of players who are just average or below average players, they just won't get paid as much, maybe a very small amount. So that's kind of the model that they're changing. But the other thing that they're trying to do as well is they are trying to make the game more fun, and they're trying to introduce new elements in the game. I mean, there's a lot that Axie can do to make the game fun. So that's kind of where they are trying to do to make it fun, and they're trying to get, and I hope by then more players will come in just to play the game for the fun of it. Also, the other strategy that Axie is doing is they are playing the layer 1 game as well. So they have a layer 1 chain called Ronin, and I think the idea for them is to also get other game developers to build on the game-specific chain. Whether or not that can play out is a question that we have to see, we have to observe. So that's something that, I mean, they've made their lives as well. They have like SLP token, they have AXS token, they have the Ronin token, so they have to manage the relationship between all these three and the prices between all these three as well. So that's a challenging task for the team, I would say.
Hi, Bobby. Thanks for a great presentation, really, really insightful. I guess my question is, what's CoinGecko's views on DAOs? Everyone seems to be making a DAO. Will you be tracking DAOs? Will we be able to, like, what stats are we going to track a DAO by? And is that something that you guys are thinking about?
Yeah, very interesting question. Definitely, we're seeing a lot of growth in DAOs. We have this internal discussion on what to do with DAOs. Should we start tracking them, or should we not do it at the moment? I think the crypto space has grown in such a way that it's grown onto so many different areas, and we at CoinGecko are struggling to keep pace with developments. So we don't know if we want to start tracking DAOs at this point in time, but we definitely have this discussion. It may be a bit too early for us at this stage, given other priorities that we have. But just some early thoughts to your question on what I think about DAO. I think DAOs are at an early stage, maybe where Bitcoin was in 2014 or 2015, or where Ethereum was in 2016. So maybe in the next 2-3 years, we'll start seeing exponential growth in DAOs. That's kind of one thing. But at the moment, we're seeing a lot of people building DAO tools. Very, very competitive space. If you're trying to build a DAO tooling ecosystem, not that many DAOs now, but many competitors building tools for the ecosystem. So it's going to be a bloodbath, in my opinion, for those building DAO tooling. So what are the things that can be tracked? So I kind of like use DeepDAO. I look at what they do there. I think interesting stats would be the amount of treasury that the DAO has, amount of and what kind of treasury assets, right? Are they holding their own native tokens, which you can't really sell in the market? Or are they holding a diversified basket of assets, tokens? Are they holding USDC? Are they holding Bitcoin? Are they holding ETH? Or just what kind of tokens? How many members are in the DAOs? How active are these members? How many proposals are being made in the DAOs, for example? So yeah, those are some of the stats I would say. Yeah.
Hi, Bobby. I was actually going to ask about DAO, but now I came up with a new question that now you said like DAO is still a few years away and compared to other priorities. So what's the next whole area you are thinking about tracking as a CoinGecko?
I think I mentioned briefly at the start, like we're probably going to put in some effort into Gecko Terminal. So CoinGecko is we take a curated approach to adding coins on CoinGecko. So we have about 13,000 coins. But reality is, in terms of the world of fungible tokens, there are 600,000 coins that in the market these days. I mean, obviously most are scam tokens, but because it's added automatically, so some group of people are sort of using to track these tokens. So that's one of the areas that we'll be trying to grow as well. I think in terms of CoinGecko as well, there's a lot of things that we need to track, a lot of incremental improvements that we need to make. We started tracking NFT on CoinGecko, the floor price. So coingecko.com/NFT, you can start seeing all the floor price for all the NFTs. So that's an interesting stat. I did not anticipate NFTs kind of moving down kind of the fungible route, in the sense that people are treating this as a liquid market and using the price floor as the price of NFT. So there's probably some integration with NFTs, trying to support this on a portfolio as well.
Awesome. Thank you so much for that, Bobby. Can everyone give Bobby a round of applause?